This is NHTV2, North Haven Government Television, a service of North Haven Community Television. The following program is brought to you through the support of the Town of North Haven.
All right, good evening, everyone. Welcome to the August 14th, 2025 meeting of the North Haven Board of Finance. I'm sure everyone had a nice summer. We've been off for 2 months, but this is the traditional start of our work for the next fiscal year. We do have our agenda in front of us. One thing I will say is we did have some correspondence. I did include the correspondence, including yours, Nancy, in everyone's package. So we do have the correspondence. I'd like to start with the minutes of the meeting for May 21. Can I have a motion on the minutes, please?
I'd like to make a motion to accept the minutes.
Second.
All right, any discussion? All in favor?
Aye.
Thank you. Okay, we do have Dave and Gabe from Clifton Larson here. They are the accountants for the town of North Haven. They've completed the CAFR for fiscal 24, and they are going to make a presentation, which we do annually for the town.
Thank you. All right, as Tim said, my name is David Flint, and with me is Gabe Epstein. We're both from Clifton Larson Allen. And I'm going to start with the financial statements, and then Gabe's going to run through the federal and state single audits as well as the management letter. So what did you guys hire us to do? First and foremost, we give an opinion on the financial statements to make sure that they're free from material misstatements and that they're recorded in accordance with GAAP. Do you guys all have a copy of the financial statements?
Mm-hmm. Yes.
So if you guys flip to page 1, you guys will see our opinion. And you'll see right here in the second paragraph, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of governmental activities, the business type activities, each major fund, and aggregate remaining fund information. This is known as an unmodified opinion and is the best opinion that can be received. So flipping ahead to page 5. Page 5 is the start of the management's discussion and analysis. This is prepared by town management within the finance office. I'm not going to go through this, but if there is one thing you take away from this document, I do recommend reading management's discussion and analysis. All right, so into the meat of the report. If everyone could please turn to page 18. This is Exhibit 1, your statement of net position, more commonly referred to as a balance sheet. And this is prepared on the full accrual basis of accounting, meaning that it includes the town's capital assets and the town's long-term debt. And you'll see over on page 18 in the asset section, those capital assets total $273.9 million. And then page 19, you have your liabilities, major liabilities for bonds payable, including the current and long-term portion. We have $91.8 million in outstanding bonds payable. We have notes payable of $5.2 million, compensated absences of $6.2 million, your net pension liability of $32.2 million, and your net OPEB liabilities recorded here as well of $96 million. That brings us down to a total net position of $64.9 million. The majority of that is what is called net investment in capital assets. And what that is basically your total capital assets of $274 million, less any debt that is outstanding to acquire those capital assets. So it's really a sign of how leveraged your capital assets are. And basically what this calculation tells us is that you have $176 million of capital assets that are free and clear of any debt, and $97 million of that is leveraged. We do have some restrictions which carry over from the funds, but basically it brings us down to an unrestricted deficit of $116.6 million. Not uncommon to see that as we bring in huge liabilities on this statement, as mentioned before, net OPEB liability of $96 million, pension liability of $32 million, things like that. So on page 20, this is your statement activities. Again, this is governmental activities. This is the full accrual basis of accounting. You'll see that we have a change in net position of $2 million, bringing us down to our net position at the end of the year of $64.8 million. Kind of what I like to focus on more is on page 21, and this is your governmental funds, and these are the modified accrual basis of accounting. They do not include things like capital assets or long-term debt. It's broken out between your major funds. The town has major funds: the general fund, the bonded project funds, and then your capital non-recurring fund. All the other funds, the smaller funds, they're aggregated together into this last column, other governmental funds. You'll see that the general fund had total fund balance at the end of the year of $11.3 million. We have a small non-spendable portion. You have an assignment here of $1.4 million. That's money that's assigned for the fiscal year 2025 budget. And then you have a remaining unassigned portion of $9.7 million, which represents about 8% of the 2024 general fund budget.
Dave, how would you say the 8% compares to other municipalities our size?
I will tell you that rating agencies are looking for numbers in the 12 to 15% range now.
12 to 15?
Yeah,
Yeah.
I would say 5 years ago it was 10, but that number we've seen is increasing over the last couple of years by a few percentage points.
And have you found in your experience that that particular statistic is offset by perhaps, other statistics that also weigh in the town's favor?
Yeah, there isn't one specific thing that they used, obviously, to provide your rating, but that is something that would penalize the town as far as their rating goes. So moving on, the bonded project fund has a fund deficit of $3.9 million, and similar to the capital non-recurring fund, also has a fund deficit of $460,000. Capital funds like this, it's not unusual to see fund deficits as projects occur and as their funding comes in after the fact. Particularly on the bonded project funds, you'll see in accounts payable, there's actually $2.6 million of accounts payable. That was actually money due back to the state for that school construction project that was ultimately forgiven. So much of this deficit here was erased by that. And the rest of the deficit will be bonded, of course. And then the capital non-recurring fund, that deficit is driven by grant receivables that are recorded, but since they weren't received within 60 days after year end, they do not hit fund balance. So once those grants are received, they're known, they just were not received. Once those are received, that fund deficit will be eliminated.
Well, the receivables there, no?
Correct, but they are, you'll see down in the deferred inflows of resources. So if you have a receivable that's not received within 60 days after year end, it instead of hitting the income statement, it actually hits this line, deferred inflows of resources.
Okay.
That's just an intricacy of the modified accrual basis of accounting. Flipping ahead to page 23, this is your income statement for those same funds. You'll see that the general fund had a small deficit of $68,000 for the year, which, to be clear, $1.4 million of fund balance was appropriated to balance the budget for fiscal year 2024. So it is not alarming at all to see a deficit here. It actually far exceeded that $1.4 million of fund balance that was budgeted. Bonded project fund, deficit of $575,000 for the year. Capital non-recurring, $4.1 million deficit. Again, capital project funds, we see large fluctuations year to year based on whether projects are being spent or whether projects are being funded via either grants or receivables, grants or bonds. And then finally, all the other aggregated funds together have a small surplus of $21,000. Moving ahead to page 25, these are your proprietary funds, your enterprise funds, if you will. So we have the Water Pollution Control Authority. You have your assets and liabilities here. You see total net position of $28.4 million. Back to this net investment in capital asset, you have $21.9 million in capital assets here. That's the total value of capital assets in the fund, telling us that none of the capital assets in this fund are leveraged. And then you have unrestricted net position of $6.5 million, which is great. We also have our internal service funds here. This is basically 4 funds aggregated here together. you have your dental and medical fund and your workers' comp fund for the town, and then you have the same two funds for the Board of Ed as well. And they have ending net position of $1.9 million. The next page is the income statement for those funds. You'll see that the Water Pollution Control Authority had a $223,000 surplus for the year. And then the internal service funds had a $451,000 deficit. The dental and medical funds themselves had surpluses for the year. The workers' comp funds had deficits.
Dave, what did the WPCA sell that we took a loss on? Do you know?
Off the top of my head, I'm not
Yeah.
sure. We could certainly look that up for you,
Yeah.
though.
Okay. What was that? What did the WPCA sell that we took a loss on?
The loss on assets. We'll get back to you on that, Tim.
Yeah.
They didn't, I mean, the expenses exceeded.
No, so this was an asset. They would have sold it. This is an asset.
I'll get back to you on that,
Yeah,
Tim.
thanks, okay.
Okay, page 28. These are our pension and OPEB trust funds. So here they're aggregated, and don't worry, I will go over each of these plans in total. But you'll see on page 28, pension and OPEB trust funds have a total of $128.4 million in assets. Page 29 kind of shows the activity for those funds for the year. We have contributions. And then more importantly, we have $12 million of investment income. Obviously it was a great year for investment returns, fiscal year 2024. So we have $12 million in investment income there. Then of course you have your deductions, but basically driven by those investment returns, you had a surplus within these funds of almost $8 million. So I'm going to flip ahead a little bit. I'm going to go to page 52. So we talked a little bit about capital assets. On page 52 and 53, you have your capital asset footnotes. I'm not going to dive into them too deep, but if you want to see kind of the categories of the town's capital assets for both the government activities on page 52 and your business type activities, basically water pollution control, on page 53. They're located in this footnote here, footnote number 6. Moving ahead to page 54, we're going to get a little bit into the debt. Note 7 has your bond anticipation notes. You'll see you started the year with $10.7 million of outstanding bond anticipation notes. $6.6 million of those were permanently financed, converted into bonds at your last issuance, giving us an ending balance of $6.7 million. Something very similar is going to happen this fall as well. Moving on to page 55, here we have our long-term debt. So we have our long-term debt broken out into two significant portions here. We have bonds, we have general obligation bonds of $31.8 million. You'll see all the issuances there dating back to 2006. And then we also have school debt as well of $52 million. The next page continues with our long-term debt. We do have some outstanding notes payable of $5.2 million. Compensated absences of $6.2 million. You know, vested, sick, and retirement that's going to get paid out upon termination. There is a new accounting standard going into effect for fiscal year 2025. It's GASB number 101. And that is going to significantly increase the amount of compensated absences that are required to be accrued at the end of the year. So we will see an increase to that $6.2 million for FY25. Historically, we've just recorded what we've vested and get paid out upon termination. Now we have to do an estimation of sick and vacation that's not necessarily vested, but will be used, not necessarily paid out. And then you'll see here our net pension liability of $32.2 million and the OPEB liability of $96.1 million. All right, moving ahead to page 95. These are your budget to actual schedules for the general fund. So RSI 1, page 95 and 96 is your revenues. We have columns for original budget, final budget, actual, and then your variance between your actual and what your final budget was. And you'll see that final budgeted revenues were $121.5 million. As I mentioned before, you'll see in other financing sources towards the end of the schedule, you'll see $1.4 million of fund balance that was used to balance the budget. Actual revenues came in at $121.4 million without the use of that fund balance that was budgeted there, which is great. Moving on to RSI 2, which is the expenditure side. That's on page 97 and 98. You'll see, again, final budget, $121.5 million of expenditures, just like revenues. And actual came in almost $500,000 under what was budgeted, of a little over $121 million.
So on a budgetary basis, we had a surplus of 395 there?
Correct. All right, page 100. I'm just going to go through the retirement plans. So page 100 is the town's employee retirement plan. And you'll see in the 2024 column, about 2/3 of the way down, you'll see something called the net pension liability. And basically, this is the plan's liabilities less any assets that are in the trust to pay those liabilities. And you see the net pension liability is a little over $12 million, and that this plan is funded 84.58%. The next page, page 101, will show you how much your actuary determined needs to go into the plan and how much the city put in. You'll see the town put in 100% and even a little bit of excess. So I'm going to go through all the plans here quickly. Page 103 has the police retirement plan. You'll see same thing, net pension liability of $14.3 million. That plan is 70.5% funded. Page 104, again, will show you that the town put in 100% of what was required to put into the plan and a little bit of excess based on what the actuaries have determined. Page 106, the fire retirement plan, $3.2 million net pension liability. Plan is 88.8% funded. Again, town has contributed 100% of its required contribution. Page 109 is the volunteer retirement plan, a much smaller plan. Has a net pension liability of $296,000, and that plan is 82.8% funded. 100% of that contribution was put in by the town as well. And then finally, we have our elected officials retirement plan. This is just, there's no trust associated with this plan, so you'll see a much smaller schedule on page 112. You'll see a total pension liability. Total, because there's nothing to net it with, there's no trust. That total pension liability is $2.4 million. Of course, the town also has an OPEB plan, which is on page 115. Other post-employment benefits, of course. There's a net OPEB liability you'll see of $96.1 million. That plan is 1% funded. It's pretty much a pay-as-you-go OPEB plan right now with a small trust associated with it. So those are the topics that I wanted to cover from the financial statements, the things that in my mind would be of interest to you guys. I'm going to turn it over to Gabe now. He's going to go through your federal and state single audits as well as the management letter.
Dave, if you don't mind, just before we move on.
Absolutely.
Could we just ask the members if they have any questions on just this particular portion? Maybe now might be the right time to ask them before we go on to Gabe. Gabe.
Thank you, Dave, and thank you to the board members. Good evening, everyone. I'm going to start with the federal single audit report, and I'm going to be presenting the results of the federal single audit for fiscal year 2024. Thankfully, it's a little smaller, a little less voluminous than the ACFR, a little bit more manageable, I think, to understand. If you flip to the next page of this report, you're going to see the table of contents. And I'm going to have you flip one more page after that to the actual page 1 of the report. And you'll see a letter here from CLA, Independent Auditor's Report on Compliance for each major federal program. This is our letter discussing your compliance in regards to the major programs we tested this year. The federal government gives guidance each year for each specific grant, compliance requirements that they want you to do, things like reporting, proper procurement, allowable costs, et cetera, et cetera. That is what this report is opining on. If you flip to the next page, page 2, in the first paragraph on page 2, it's called Other Matters. You will see there's a finding noted in here, 2024-004. That is an other matter, and we're going to discuss later on in this report what that finding represents. If you'll flip forward to page 5 of the report, this is your schedule of expenditures of federal awards. Sometimes we call this the CFA. And this is the data underlying your single audit report on the federal side. The actual expenditures for each of these specific programs, funding received through the federal government. Schedule shows the program name. In the first column, it shows the assistance listing number in the second column. This is basically like the federal government's identifier. In the third column, the pass-through ID number. This is usually the state of Connecticut's own number, or if it was received from a grantor other than the state of Connecticut, you know, their specific contract number or the way they identify that grant. In the fourth column, pass through to subrecipients. These are any expenditures that were passed through from the town to a subrecipient organization based on the grant. And in the final two columns, you'll see total federal expenditures. This is breaking out expenditures by each specific program, any program clusters, by each of the federal departments, and then in total. And if you flip the page over to page 6, on the bottom line of page 6, total expenditures of federal awards of $8.6 million. This is a decrease from last year. Fiscal year 23, you expended about $12.1 million. So about a $3.5 million decrease year over year. And what is that attributable to? Mainly attributable to the ARPA grant. There was about a $5 million reduction in the ARPA grant expenditures year over year. That is because the town fully expended their main allotment from OPM last year. You know, these COVID-related grants are winding down. They're either fully expended or they're getting to the end of their period of performance. And along with that, there's a decrease in total federal awards, which is to be expected. That decrease of $5 million for ARPA is dampened a bit by about a $1.4 million increase in the Community Development Block Grants program. This is sometimes called Small Cities, and this one was for Temple Pines renovation. So about a $1.4 million increase there, about a $5 million decrease in ARPA. That's basically what that decrease can be attributed to. If you flip to the next page, these are the notes to the CFA. And then one page after that on page 8, this is the second letter within the Federal Single Audit Report, our report on internal control over financial reporting. So while the first letter is in regards to your compliance with the federal requirements, the second letter is in regard to the actual financial reporting itself. So this ACFR that Dave just ran through with you. Our expenditures within this report are only as accurate as the town's financial reporting, and there are controls for that reporting. And that is what this letter is opining on. You can see on the last paragraph here of page 8, we do have a few additional findings related to financial reporting, 2024-001, 002, and 003. So 4 findings in total related to this report, and we'll run through exactly what those represent momentarily. If you flip forward 2 pages to page 10, this is probably my favorite page of this report. This is summarizing all the findings, the question costs. It's basically laying out exactly what those 2 letters say in a very readable and understandable format. So the first portion of this, financial statements, that's in regards to your internal control over financial reporting. We issued an unmodified opinion on that report. As Dave mentioned before, that's the best opinion that can be received by the town. However, it's important to note that we did identify some findings related to this. You can see the material weaknesses identified, boxes checked yes. For the second section, federal awards, this is your compliance with major federal programs. Once again, an unmodified opinion. However, we did note a significant deficiency, so another type of finding, slightly less serious than the material weaknesses. The third section here is your identification of major federal programs. So these are the specific programs that we tested compliance requirements for this year. 2 programs that we tested, highway planning and construction. This is the Sackett Point Road Bridge project. And then the second item, as I mentioned before, CDBG non-entitlement. This is the Temple Pines renovation. If you flip to the next page, this is where the findings are laid out within the report. So I'm going to go through them one by one. The first three findings are in regards to the internal control over financial reporting, so your financial statement findings. First item here is general ledger maintenance. What does this mean at a high level? There were audit entries that needed to be posted, that CLA identified and prepared along with management in order to correctly state some balances within your financial statements. A listing of these entries was attached to with our final letter to the Board of Finance. Some of these entries were material, and because of that, it is classified as a material weakness. Our recommendation on this is that the Board of Ed should develop additional month and year-end closing procedures, and that the town should revisit their procedures and make sure that they incorporate the areas that needed to be adjusted by CLA during the audit. I think it's important to say that this is a first-year audit for us. It's a learning experience for management to figure out what CLA expects. I do believe that, you know, the management personnel that are in place are completely capable of remediating these findings going forward, and they've already taken action on this specific finding. They're reviewing the adjusting journal entries proposed last year. They're developing additional procedures in the financial statement close area.
So Gabe, as we go through these three findings, I just want to pause after each one. Let's see if Ingrid, I know you just gave the corrective action, but I just want to pause and see if Rich or Ingrid had anything that they want to say about each of the findings as we go through them.
I think Gabe has said it. There are some protocols that were being followed that we've now changed. Again, Board of Ed had to do with year-end close. I'm not sure if that one was part of this one as well. We are working with Board of Ed. You'll see is one of the things we included in your packet was an action plan from the Board of Ed, how they were going to correct some problems, and an action plan on the town side for some of the things we needed to correct. Nothing, as Gabe said, is really earth-shattering, but we take it seriously. CLA has been a collaborative effort with us to modify some of our protocols. One of the items, I don't know if it follows, it actually involves these reports, is you have a resolution where there's a little clause we need to put at the tail end of our purchasing policy. That's one of the resolutions this board is going to approve tonight. We did implement it. Town attorney said we did need Board of Finance for approval. It's on your agenda. But, you know, we've, on the town side, anything that was deficient has already been corrected, and the Board of Ed has given us the action plan for themselves.
Thank you,
Okay,
Rich.
so I have a question about the follow-up. So they have a plan?
Yes.
So how do we know throughout the year that,
Right now, we are meeting, Howard's back at the Board of Ed. I would say in the last month, we've been meeting weekly with Howard for 3.5 to 4 hours every Friday, making modifications to their protocols, aligning our books with their books, changing some of their procedures, changing some of our procedures to make it easier for both of us to tie out more systematically.
okay, I just want to make sure that we're checking.
Yeah, Howard, it's been a great step forward with Howard back.
Well, that's a legitimate
Yeah.
question, because this being a repeat finding, we would hopefully want better compliance than the non-compliance that occurred in the finding before us today.
And I think if Dave and Gabe expand upon it, because we've already had our first meeting for the current audit that will be starting soon. I think we're all pretty confident as to some of the changes that have already been put in place.
Yeah, I mean, we haven't dug into anything yet for fiscal year '25, although we have started our preliminary procedures, and based on discussions with both the Board of Ed and the town's finance department, we expect things to be much cleaner this year.
Okay, thanks, Dave. Go ahead, Gabe.
Flipping the page to the next page. Second finding here is bank reconciliations. This one, once again, is a material weakness. On the Board of Education side, what we expect is timely and accurate bank reconciliations. On the Board of Ed side, there were some reconciliations not performed on a timely basis, and some of the reconciliations were found to contain material misstatements, which had to be corrected during the audit process. On the town side, we found that reconciliations were performed timely and accurately. However, there was no formal control over those reconciliations as far as review. So we always like to see, and I'll mention the same thing in relation to journal entries, separate preparer, separate reviewer, especially in regards to key areas, things like journal entries, bank reconciliations. Having two different parties involved in each of these processes can really help limit the risk and limit the exposure. Basically, anything improper would have to go through two people now. It would require collusion between two individuals rather than one individual having unilateral control over that process. So what we're recommending is that the Board of Ed strengthen their monthly bank reconciliation procedures, making sure that those are performed timely, they're performed accurately, that the balances are in agreement between the Board of Education and the town. And on the town side, that they ensure that all the bank reconciliations are formally reviewed, indicated by a signature, initial, something of that effect, clearly showing that there was a separate reviewer for the bank rec.
And if I can interject, the bank recs are reviewed by a second person, but we weren't signing off on them. We weren't initialing the report itself. So now we will just add a signature to those pages.
And
So
Rich,
the-
sorry, Mike, go ahead.
The second signature is coming from the town finance department or within
No,
the
this is
business
strictly on,
office
this
of
is
the
strictly on the town side. The
Yeah.
Board of Ed has their,
Board of Ed? has-
yeah, the only, the
has their
deficiency
own-
on the town side was we physically weren't signing a piece of paper at the end of the report saying it was reviewed. It was being done, there was a separate person doing it, but we didn't initial off on it. We've started initialing off on it last year, partway through the year. And there's another thing, another deficiency we'll get into where we started different tracking, so, but we'll let Gabe get to that point.
Yeah.
And Rich, my understanding is that the Board of Ed is now reconciling monthly, right?
They weren't in this particular audit.
Right, but they are now.
They are now.
Yes, right.
Yeah, this is embarrassing because it is a repeat offense. This is something that we thought was being addressed, and so we have to hope that our town finance department will make certain that the Board of Ed complies.
Howard's doing a fabulous job so far, so I'm
Yeah.
feeling very confident.
Since he arrived in
July.
In July.
In July,
Yeah,
right.
July.
Okay.
We gave him the first 3 days off, and then we started hammering him.
Go ahead, Gabe.
Just a quick question, and this is considered just a single material weakness, even though it seems to me that it's two separate weaknesses, one on the Board of Ed side and one on the town side.
That's correct. It's the same audit area, so basically, there's an issue on one side, there's a separate issue on the other, but it's being rolled into this one material weakness.
So under one category of bank reconciliations,
Correct.
there are two distinct issues with two distinct departments, but you're
Correct.
considering it to be just one material weakness.
Correct.
Got it. Okay, thank you.
Moving on to the third finding, this is journal entries. This is not a repeat finding, although I don't believe there was any change in journal entries year over year. Sometimes just a different set of eyes on the books. A lot of auditing is professional judgment as to what is an acceptable control, what is not. And in our professional opinion, there must be, as I said for bank reconciliations, there must be a formal sign-off by both a preparer and a separate reviewer on journal entries. Segregation of duties is very important for journal entries. Some of the most well-known frauds have occurred through the journal entry process. So making sure there's multiple people involved in this process, that there's a separate person signing off as preparer, a separate person signing off as reviewer, it means that collusion would be necessary between the two parties, limits the risk significantly compared to one person. Similar to the bank reconciliations, I believe this is a process that was happening on a more informal basis previously. However, it's something that we just want to see formalized, documented on there, on paper, a sign off from both individuals. And the town and Board of Education, it's important to note, have implemented workflow within their financial software to document that this review is occurring. So within their Munis software, there is a workflow now where each entry has a sign off by the preparer and by the reviewer, which is essentially exactly what we want to see. I do also want to note that because of the timing of when the fiscal year 24 audit occurred, although the finding has been remediated now, since the audit didn't occur till mid fiscal year 25, there's about half a year's worth of journal entries in there that were following the old process. So this is a finding that I would expect to remain on the report next year, despite the action having been taken. Just want to make you guys aware of that for full transparency. Also do want to note that we did test a sample of the actual journal entries themselves. There was nothing found to be improper with the actual transactions themselves within the sample we tested. It's simply a lack of formal proof of that review and approval occurring. I'll go on to the final finding here, which is procurement. This one is a significant deficiency other matter, so it's considered less significant than those three findings that I went through previously. And this is a programmatic finding rather than a finding on the financial statements themselves, although it does apply to all federal programs. And as Mr. Monaco mentioned before, this is in regards to your procurement policy. Within your local policy, there are certain language and sections within the Code of Federal Regulations that need to be incorporated into that policy in regards to purchases that you make with federal funds. It's typically only a paragraph incorporated by reference, but that is something that we want to see within your policy to make sure that you're fully compliant with what the federal government is expecting. As was mentioned, I believe that's on the agenda for tonight. And along with that, I do also want to know we do test a sample of procurement transactions. We tested a sample for the Highway Planning and Construction Grant. There was nothing found to be improper with the actual procurements themselves, the actual transactions. The issue is with the policy itself only.
Thanks, Gabe.
That's it for the federal report. I'm going to move on to the state side. It looks, the format of this report looks essentially exactly the same as the federal report, so I'm going to speed through this one a little bit faster. If you guys will turn to page 6 of this report. This is the end of your schedule of expenditures of state financial assistance, so the equivalent of the same schedule that we looked at on the federal side, breaking out all your expenditures here from state of Connecticut programs.
Does anybody have the state report?
I don't have it.
I have it.
Just, yeah, thank you.
Anyone else need one?
Thank you.
Page 6, Tim.
Thanks, Gabe.
I brought one up for you, Michael.
I have it.
Yeah.
Page 6, the schedule of expenditures of state financial assistance. You'll see the bottom line here, total state financial assistance expended of $9.99 million, $10 million. It's about a $150,000 increase from last year, so fairly consistent with last year. That increase is not attributable to one specific program, so there's no new program that I can point to, say, hey, there it is. Simply fluctuations in the funding and expenditures for the existing programs. If you flip to page 10 here in the report, you'll see, just like we looked at on the federal side, schedule of findings and question costs, the top section, your financial statements and unmodified opinion. You can see there are material weaknesses identified. These are the same 3 material weaknesses that we just discussed on the federal side. The same financial statements underlie both the state report and the federal report, so these findings are the same between the 2 reports. Bank reconciliations, general ledger maintenance, and journal entry review and approval. The second section is your programmatic, your compliance with what the state of Connecticut says you need to do in regards to these programs. And you can see we did have a significant deficiency here. It is different than the procurement one that I just discussed, and we'll go over that momentarily. But important to note that you did receive an unmodified opinion on both reports, the financial statements and compliance with state financial assistance. At the bottom of this, just like federal, you can see the programs we tested. Local capital improvements, sometimes called LOCIP, $271K, and municipal grants and aid, a public works related grant for $2.2 million. If you flip past the 3 material weaknesses that we just discussed, the language is exactly the same, to page 14. You'll see your one finding that's specific on the state side. This is for the local capital improvement grant. There's a report that's required to be submitted by OPM each year detailing your expenditures, and that is supposed to occur by September 1st of each year. We noted that for fiscal year 24, that report was not submitted timely, However, the amounts within the report that was submitted were determined to be accurate. I think it's important to note that because of the timing of when the 2023 audit was finished, that did have some impact on when the town submitted this report. They didn't want to submit the form until the previous year's audit was completed and current year balances were analyzed. So there is some rationale behind, the timing of this.
When was the report submitted?
I would have to refer back to that, but I believe it was well into fiscal year '24.
Thank you.
It should be noted that this year's has already been filed.
Yep. The report for fiscal year '25 was submitted already, so this is a finding that I expect will be remediated for next year. Are there any questions on the state and federal single audit reports? Okay, I'm going to move on to the last item here, which is the management advisory letter. This letter details items we became aware of, certain deficiencies in internal control, other than significant deficiencies and material weaknesses, the items that we just discussed in the single audit reports. Some of these are best practice items. Some of these are items that we see as less significant, not significant enough to go in those single audit reports, but still significant enough to bring to you governance and make you aware of it. First item here is documentation of census data and employee record keeping. This is in relation to the VFF plan. Some issues with the process of the town, obtaining the data that they need to send to the actuaries in order to do their report. It's important to note that this VFF plan is the smallest pension plan. These discrepancies did not have a material effect on the calculation. This is why it's going on this letter as opposed to a more serious finding.
Can we hold for 1 second, Gabe?
Sure.
What letter are we looking at?
That was sent out with the audit.
Is it this one?
It was sent with the
Okay.
audit itself.
Let me say it again, Gabe.
Yep.
Just turn around a second again. A letter.
Oh, sorry.
Yes.
That's not the one I have.
What do you got, Tim? Let me see.
Yeah,
I've got this, which I think is the opinion, right?
I don't think I have that letter.
Yeah, I don't think that's it.
Which one
Does everyone else have the letter or no?
I have this one.
That one?
No, it
It's a little
doesn't.
thicker than what you
It doesn't look
Doesn't
like you
look
have
like
it.
it.
We'll make
Oh,
sure you
yeah.
guys. We'll make sure you guys get a copy.
Sorry.
Yeah.
If you don't mind, we'll just
Yeah,
we'll go
that's
through
fine.
it. So.
Yeah.
It was sent out with the audit.
We sent that with the-
We'll make sure it gets provided
Yeah.
to you
All
guys.
right.
I'll
Go ahead,
briefly
Gabe.
run through these findings. I think they're relatively straightforward,
Okay.
and I'll
Go
be
ahead,
able to
Gabe.
explain them to you.
Yep.
The first one is on the VFF census data, like I mentioned. We just want that process of the town obtaining that data to be formalized a little bit better. Unlike their other plans, the data for that VFF plan is not housed at town hall, it's housed off-site. It's leading to some issues with the town obtaining the data that they need to give to the actuaries each year. Our recommendation is just to review this process, try to streamline it going forward, potentially consider moving those records over to the town hall somewhere where they can be more easily accessed. We have a few other items on this letter: capital asset maintenance, capital asset useful lives, and the capital outlay reconciliation. Basically, there were some discrepancies we noted while we were going through your capital asset work. When we initially got certain reports from the town, we saw some items duplicated in there. Those errors were subsequently corrected. We got the revised reports, no issue from an audit perspective. All we want to see is, an additional check occurring on those reports once they're generated each year, making sure the town is checking those over, reviewing them before they give it to us, the auditors. That way, we have two parties reviewing those reports. We got the town looking at it, then CLA looking at it. It's a lot less likely that any kind of discrepancy is going to slip through in that situation.
I have a quick question related to that.
Yep.
So we, based upon recommendation from another auditor, we've changed over in terms of our internal accounting regarding our capital funding, and we, on this Board of Finance, simply receive a notification at the end of the year that the capital expense has been made in one lump sum. In previous years, we would find out each month which capital expenditure has been made, and we would be able to kind of track it. Do you have a recommendation as to, is there a better way to do that? in terms of, again, having another 7 set of eyes, kind of tracking this throughout the year?
I don't think we'd have a recommendation for you other than you guys need to develop an internal policy. It sounds like you don't have one currently.
Well, I think we do, it's just a different one, and again, I think that kind of keeps this board in the dark in terms of the actual capital purchases on a month-by-month basis. And so I would much rather have, you know, something that is reflected in our munis reports every single month where we can see, yes, you know, this has been purchased for the fire department or the police department or whatever the case may be, as opposed to just at the end of the year getting, you know, the last month report.
Yeah,
that has
yeah,
been spent.
we've certainly seen it both ways. I'm not sure it's something we would give a recommendation on, but I would recommend you guys coming together and, you know, coming up with a formal policy.
Got it. Okay, thank you.
Couple other minor items noted within this letter. One of them is fund deficits. This is something that Dave discussed already. Anytime there's funds in a deficit position, it is something that we note to the town within this letter. I think important to note, like Dave mentioned before, the funds that are in a deficit, you know, bonded projects, that's primarily attributable to that school construction payable that has now been forgiven. Capital non-recurring, mainly the deferred inflows, receivables, primarily for that Sackett Point Road Bridge project. Receivables that are expected, they just have not come in yet. That should alleviate that deficit in capital non-recurring. Same with state and federal grants, a combination of, you know, revenues that simply have not been earned yet because the funds have not been expended, and also receivables still to be collected. And then for the 2 remaining funds, the workers' comp funds, these will be funded most likely through future general fund contributions. There are 2 additional items in this letter. One is an accounting procedures manual. This is something that we often note to the towns. The town does have formal documentation over their processes, their controls, over various audit areas, whether it be cash, collection of receivables, doing their fiscal year-end close entries, and all that type of thing. We just want to see these policies centralized, brought into one document. It's good for succession, it's good for transparency. If somebody new comes on, it's easy for them to see what are my roles, what are my responsibilities, you know, what do I need to be doing that the last person was doing. And having all those files in one place, we recommend typically as a best practice recommendation. And then the final item here is a fraud risk assessment for the Town and Board of Education. This is a process that we also often recommend. You can certainly bring in an outside firm to do this work. This is basically brainstorming about the ways that fraud can occur within different departments. You can bring on an outside firm. It can be a formal process. It can also be an informal process between management and the department heads. And that's really what we're recommending. We'd like to see, you know, management sitting with some of the department heads. Doesn't have to be every single one all at once, but, you know, pick a few departments, start with them, sit with the department head, and brainstorm. What are the ways that somebody could steal from the town within your department? Management here knows the finance department and their controls like the back of their hands. But these department heads are the ones that know operationally within their departments, what are the ways that fraud can occur? What are the ways that cash can come out of the register? What are the ways that, you know, wiring can walk off the job site? They would be the ones best equipped to answer those questions. So we like to see finance just sitting with those department heads, a couple departments at a time, brainstorming about those risks and brainstorming about new controls that could be put in place to address anything that comes out of that discussion. Are there any questions on the management letter, any of the items that I just discussed?
Any of the members have questions for Gabe or Dave?
No, I didn't receive that letter, but I'll get that.
We'll make sure you guys get a copy of it.
I just have a quick question, not so much about this enormous volume of information. So first of all, thank you for all of this. But going forward towards evaluating the next fiscal year audit, do you have an estimate as to when you think we should be able to have the audited numbers? Because it would be much more preferable if this board actually had that information when we were developing our budget, you
Yep.
know, in the
Yeah,
February to March.
the offer is due December 31st, and based on our preliminary meetings with management, we don't see why that's not an achievable goal.
Wonderful. That would be my preference as well. Thank you so much.
All right, Dave, Gabe, thanks very much.
Thank you so
Appreciate the
much, guys.
presentation.
Thank you.
Thank you.
Appreciate
Thank you.
We got the resolution come up. All right, the next item on our agenda is the resolution that was referred to by Gabe just a moment ago. I'm going to ask Diane to please read the resolution.
Where is the resolution? Hold on, this. Okay. Resolved, the Board of Finance of the Town of North Haven does hereby adopt the foregoing in full as part of the town's purchasing and procurement policies and procedures. Whereas the Town of North Haven is a non-federal entity in the context of 2 CFR Part 200. Whereas 2 CFR Part 200 contains federal uniform guidance. Whereas federal uniform guidance includes administrative requirements, procurement requirements, standards and requirements, cost principles, contracting requirements, and audit requirements applicable to the projects and costs funded with the federal funds. Whereas the Town of North Haven from time to time funds capital projects with grants or other awards funded with the federal funds. Whereas the Town of North Haven since 2018 has been in compliance with federal uniform guidance on projects funded with federal funds. Whereas the Town of North Haven hereby formally adopts as part of its purchasing and procurement policies and procedures the federal uniform guidance procurement standards of the Code of the Federal regulations as set forth in section 200-318 through 200.326. Whereas the Town of North Haven further adopts as part of its formal procurement purchasing policies and procedures the following requirements.
I don't think you have to read that.
What?
I don't think you have to read that.
Okay.
All right, I'll move the motion. Can I have a second, please?
Second.
All right, we'll go to discussion, but I'm going to defer to Mr. Monaco for a second. But Rich, just confirm, my understanding is there's no change to our purchasing
No.
policies and procedures. The real change is just the
That-
notice that
that
goes at the
little
bottom of
disclaimer
our
on the bottom.
policies, right?
That's it.
Okay. Any questions by the members?
Is this something that, excuse me, is just approved by the Board of Finance, or does this go to the Board of
Board of
Selectmen
Finance.
and?
Just the
and
Board of
town-
Finance.
Town meeting, okay, so just us.
So this is something we've always followed, but we're just formalizing it tonight.
No, it's just, our purchasing policies aren't changing, but the policy didn't include this box at the bottom.
Right, but we always followed it anyway.
Yes, we were
Yes.
Okay.
That's, when he did his
Right.
audit, as he said, we were in compliance, we just didn't have the footnote disclaimer.
Yeah.
We changed, as soon as they made us aware of it, we began doing it halfway through the year. It turns out, we checked with the town attorney, and it does require Board of Finance approval. So the resolution, I mean, we couldn't do anything over the summer, so first meeting back, we need to get it approved. We've already implemented it, and we're doing it. We just need your final blessing.
Okay. Thanks, Rich.
And does this mean that prior to 2018, we were not in compliance with federal uniform guidance?
This was never in their code, so it wasn't in compliance before 2006, halfway through 2024.
Because it says, whereas the Town of North Haven since 2018 has been in compliance with federal uniform guidance on projects funded with federal funds. That tells me.
So there's
prior to
somewhere
that, we
between
weren't.
18 and 24 that this footnote was added to be in compliance.
I see.
All right, all those in favor?
Aye.
Aye.
Anyone opposed? Motion passes. All right, we have our reports. The agenda actually says June and July, but we actually got May as well. My suggestion to the members is that since we have June, and obviously that supersedes May, that we talk about the June numbers, and then we do have July, and then unless there's a burning question on July, it is only the first month of the fiscal year. I don't know that we need to go into that, but if there's a burning question, we can certainly ask it. Before we go to the reports, Rich or Ingrid, did you want to talk about this one piece of paper that was in the report?
Sure.
Oh, yes.
We provided a summary. It is unaudited. We don't have final numbers from the Board of Ed yet, as mentioned, because they haven't had their meeting yet. So we should have final numbers by next month's meeting, which we will present the budget transfers on our side.
So the town numbers are final, but
We do know in our books they're fully expended. The Board of Ed
the Board of
side.
Ed is, yeah.
Yes.
Okay.
On the town side, we did have a revenue shortfall of $301,000, 211. And the expenditures, we were under expenditures by $595,000, which that will give us a projected fiscal year 24-25 surplus of $293,000,
But
$830.
just for the record, those are not just the town numbers, those are the town.
Town-
Those
and
would
Board of
be
Ed.
town and Board of Ed.
Yes, right. Okay.
We don't,
They're not final, but that's what we
They're
have.
not final,
Right, that's what
the
we're
Board of Ed
providing for
Right.
you
use their
today.
entire budget.
Okay. Any questions on just this one-page document for Ingrid or Rich before we move on?
Yeah, so none of these numbers are actually audited, right? These are
No
all,
They
number-
won't be
won't
until
be
the
audited till
audit
December.
is issued.
Yes.
so.
And they have never been until the audit has been issued.
And again, so we don't have for the Board of Education, the split between how much was spent versus how much was transferred? Or, because it, you just have the entire amount that was
Right.
allocated?
Yes, that's because they're fully spent. So they will give us a report by next month's meeting.
We
So-
usually do the transfers in August, right, historically, but we've
Oh.
moved into September for this.
Are we talking about transfer
No, the
between
trans-
budget line items?
Yeah,
No,
those
I
are
mean
moving to
transfer of the
September's
surplus
budget.
to their non-lapsing fund.
We don't expect them to have
A surplus.
a surplus.
Okay. And again, because the decision was made to forego cash surplus unappropriated on a revenue side for $500,000, this net revenue shortfall of $300,000, again, had we made that decision to actually include that revenue, we could have actually had a revenue surplus, but that decision was made.
Well, it's really not true, because you're budgeting for a deficit.
Right, as the auditor mentioned, that when you budget for
Yeah, I mean,
fund
Sorry.
balance money, you're budgeting for a deficit. So by not using it, it's actually helping us not having a deficit.
And the rating agencies do not want to see you use fund balance money. They want you to increase it, not decrease it.
Right, and also we included the QU money, $300,000 as a source of revenue for
Which
one
was,
last time, which was a mistake,
is
of
not in
course.
the budget.
Right, but
Eh.
ultimately, we're $800,000 behind the eight ball, from the very beginning, because those were budgeted as sources of revenue, right?
But we also,
Well-
if you look at it, we also budgeted $1 million in building fees, and we were short $708,000.
Oh, I'm well aware,
So-
that, we can go through all of the numbers, but in the end, our short-term investments saved us from several of the, shortfalls on the town revenue side. But I think it's worth pointing out that,
That and the miscellaneous income,
and miscellaneous income as well.
which was mostly related to
Right.
But
blight.
that's no different than any other previous fiscal year, where our
Right.
building permit fees exceeded some of the deficits on interest income or other lines items.
Right.
This is a very standard thing in this overall budget. There are line items that go over on revenue and line items that go under. So this particular year, our interest income went really very high.
Very
So
high.
it offset some of the building permit fees. It's a normal occurrence, and the bottom line is unaudited, $293,000 surplus.
listen, I can remember when they closed down the various escrow funds, Mike, from the transfer station, right? We got money into the budget for at least 2 years in a row, right?
There was millions of dollars, to your point,
Yeah.
from CRRA.
Right,
That's exactly right.
yeah.
So
So it happens,
these
right.
things happen.
Right.
That's why it's important during budget time, you don't overestimate revenue, because there's no way to make money. So,
All right, any further questions on this document before we move on to the the June, which is really the full year revenues.
Well, part of the aspects of this summary sheet will, can be further discussed if necessary when we look at the June income and expense
Yes,
report.
exactly.
All right, so why don't we go to the June revenues?
Tim, did you want to make some sort of general comments about end-of-year revenue report?
No, go ahead.
So overall, we collected about 99.8% of revenue, but that doesn't mean 99% of everything that we budgeted, as we talked about. There was that decision not to collect unappropriated $500,000. Obviously, we did not collect as revenue the $300,000 from Quinnipiac. And the interest on short-term investments was about $2 million, and we only budgeted for about $850,000. So really, the total town revenue general really made a big difference in terms of compensating for the shortfall in our town revenue departments, and in particular, the deficits in town clerk fees, building fees, fire fees, and paramedic service fees. They were, really only about 58% as a total category, whereas the other category of general funds was at 161%. So one compensated for the other. And also, it's nice to see that our ECS grant came in a little bit higher than it was budgeted for, at 103%, at $4.5 million.
There was an extra contribution at the end of the year,
Yeah, the legislature passed, it was like
Yes.
97,000 or something?
135,000
Okay, yeah.
extra contribution for ECS.
Other members have questions or comments on the revenue for the June year-to-date report?
It was interesting to see that the short-term interest of $202,000 for June was higher than the $110,000 listed in May. It could have to do with just dates of recording and so forth.
Could be prepays on the July 1 tax bill.
A lot of
No, they
the
didn't go out till-
fluctuations, I should mention, a lot of the fluctuations on revenue and expenditures that you'll see, it's because we are reconciling everything by the end of the year. So we're getting like statements
Yeah.
from,
But Tim,
Investments account.
Tim makes a really good point. The interest on short-term investments, of course, is affected by people paying the following year's taxes, which are being
That's right.
received, but do not show up in the June report. They don't show up until the July 1st report. So, okay, Tim, that makes sense.
Yep.
Thank you.
All right, let's go to the expenses, but before we open it up to the members, I'm going to ask Rich to just talk about one particular item, which is the workman's comp, which is on, let me get the right page here.
17, I think.
What page, Mike?
I think it's 17.
Yes, thank you. So, Rich, could you just talk about the workman's comp on page 17, please?
Sure. As Dave and Gabe mentioned, in that one-page sheet that we gave you for worker comp, you'll see that at the end of fiscal year, fiscal year '24, the town actually was running a deficit of $628,000 in our worker comp reserve account. We funded now in '25 an extra $900,000 basically, which made our ending number for '25 a $325,000 positive number. Now, the things you need to understand, there's a lot of things you need to understand that are going on with worker comp. The first part of it is, even if you look at this, the negative 628 and 24, we're not short cash. This includes our IBNR, which is expected but not reported claims. But the town has also made the decision that come January, we're going to change to a conventional worker comp policy where we will be a lump sum number and we won't be self-insured. So we need to make sure that our reserve account is where the actuaries tell us it needs to be, because we're still responsible for everything before our switchover in January. So getting up to making sure that's a positive was important. Talk out of school, the Board of Ed, same thing. These numbers are negative. They, at any point in time, may not indicate negative cash, but definitely their cash is low. So they need to come up with a plan to help shore up, because they'll be moving along with us come January.
So I know the members know this, but Rich mentioned IBNR, which is incurred but not reported. So what that refers to is that once we move over to the conventional plan on the 1st of January of 2026, we have to have reserves in place for potential claims that have yet to be reported as of the end of our self-insured program, and we need to cover those because we're liable for those. The new plan doesn't cover claims that occurred prior, or that will occur prior to December 31st of this year. And actually, this has come up numerous times, at least in conversation amongst the board members for the medical, which is also self-insured. We've talked several times about the fact that if we ever went to a conventional plan, you need to have reserves in place to cover the same thing. So here it is happening, if you will, right with the workman's comp plan.
As a point of reference, the model for self-insured medical does work for us. It is the most efficient and economical way for the town to deal with medical insurance. The worker comp has way too much volatility in it. You know, if you go back years, you'll see that plan was well-funded, and it was in the black. You have one major problem, which was, that really hit the plan hard, was the explosion where a number of officers were hurt. That was expensive to our worker comp.
All right, well, this, you know, obviously this, thank you for this sheet here that shows some history in the workman's comp on both sides, the town and BOE.
That's all English. She's smarter than me.
Yeah, nice job. So it shows that you're right, the BOE is in a deficit position of $1.4 million. How are they gonna make that up?
Again, it's not a cash position.
Yeah.
It's with their liabilities.
But you said by the beginning of next year, is the BOE also going to go into a conventional
They're
plan?
gonna go into conventional plan.
And so do we have to get that up to zero before then?
They need to start funding that a little bit more.
Right.
Hopefully they have minimal claims this year that helps them. It may be necessary at one point for them to shift some money from medical to worker comp. But it's something we're exploring with the Board of Ed.
Mike, I share your concern. It's a big number, and I understand the concept of the IBNR, and that's an estimate by our actuaries, so it could be high, right?
Well, here's the other thing, and let me just interject one more second. Here's the other thing you have to understand, the way the actuaries are dealing with this IBNR, which I don't 100% agree with. Let's say you have an elbow injury, and they've paid out $10,000, but historically they know an elbow injury costs $30,000. So they have a reserve of $20,000. It seems like almost the actuaries take that number, use a multiplying factor, and that becomes your IBNR for that line item. I personally think it's a little aggressive on their number, but the Board of Ed does need to increase their reserves.
This line item then, that says expenditures, is it just estimated liability?
No, it's both.
That-
It's
That's
the,
their actual,
that's their expenditures
actual
plus the
expenditures.
IBNR.
plus the IBNR,
It's
Yeah.
both.
So this.
plus the
so-
IBNR's in there.
So this $1.4 million in the deficit is a real number.
Oh, yes.
Yes,
If-
it is.
With the IBNR factored
Right.
in, with the
It's a real
actual.
number,
With the
Mike,
claims
that's
that
not
will-
finalized, because the IBNR could be less, could be more too, by the way, but they're gonna have to move
But
some
it
money
could be
over.
close.
Yeah.
Yeah,
Yeah.
yeah.
If I can just summarize, what Rich is trying to say here is that there's an aggressive number put in because of IBNR. And you do that as a safety net because in many cases, it's not as aggressive as it has been projected by the workman's comp actuaries, let's say. So from this point forward, we see the expenses and the IBNR. And there's always a mechanism to reduce the IBNR through the claims and through settlements and things like that. So, as Rich said earlier, it's not a cash deficit. There's a expense plus an anticipated liability.
Exactly.
And our goal is to always reduce the anticipated liability, which is, now you're hearing for the first time, IBNR. That's the acronym.
As the Board of Ed closes their claims, that number can start to fall.
Right.
And they are, Christian has been more aggressively in the last few months, trying to close as many claims as he can.
Got you.
Rich, what is the cost of our new going forward January 1st of the new plan?
We're in negotiations with
yeah.
that right now. So in a fully funded model with workman's compensation, we wouldn't even be talking about this next fiscal year, other than whatever claims that we have been able to reconcile because of the IBNR. So Rich and I, we're working with our agent. On this, and we hope to have a proposal on this.
Yeah,
So,
I don't have the budget numbers with me, but it's to our advantage to move.
yes. And one final thing, sometimes I tend to repeat things twice. Rich already said it, so I'd like to repeat it again, because this is the main part of the message, okay? In today's environment versus 10 years ago when we did it the reverse, the volatility factor is much greater right now on the workman's comp, injuries, employees getting hurt, sanitation workers getting hurt. But as we sit today, we have no intention of moving to a fully insured model on health insurance because it's working to our advantage right
Yes.
now.
Thanks, Rich. Why don't we open up to the members to see if they have any questions on any other expenditure items in the June report?
Just some standard ones here. On page 4, the $62,000 maintenance of equipment line for the library.
Mostly related to the generator.
Generator. Okay. Good thing that was, that sum of money was in that line, that's good.
Well, she did end up with almost $42 left over, so.
It's true.
Yeah, on page 6, the reserve accrued benefits for the, that are in general there, not police or fire, 162 in 1 month, is that just something that's just accumulated, or is
No.
that
You want to do it?
for one month expense?
It depends on the longevity of the person that retires or leaves the town. So all their accrued sick time and vacation is paid out.
Right.
And a
So-
lot of people are leaving
Right.
at
I know what it's
contract.
for, I
Right.
just
Yeah, a lot
thought
of
the
them-
number seemed a little high.
They're
Yeah.
retiring in June.
A lot of people retire in June, yes.
Okay, I wish them well.
Actually, there were 6 police, 4 fire, 3 public works, 1 clerical, 2 supervisors, and a department head that retired that fiscal year.
But again,
Partridge and the Pear Tree has
police
done-
department and
has
and
worked
fire
in
department
some.
have their own line, right? So
No,
this is-
not
No,
a
this
reserve,
is not in
no.
the reserve.
This is pay out of reserve benefits.
police department reserve accrued benefits? Oh, this is, yeah,
This
That's-
is sick time, accrued sick time, as our auditors were mentioning in the act for the new rule that's going to change, that's gonna bring the liability higher. And it's paid out of our budget.
Those reserved for police and fire have to do with spouses that are retired. It's not
I see.
retirees, it's those people that are already retired.
These are active employees that are retired.
Mm-hmm. I see.
And it's a guess every year.
14, community service consultants.
That's BH Care. After the budget was complete, they did, there was a significant increase in their cost. We basically negotiated it in half the next budget cycle. After this one, we'll have that new number. You'll also notice though on revenue, they were over, community service revenue was over about the same amount, so kind of one hand washed the other on it. But it was BH Care's contract that increased.
Page 8, under police, shift differential.
Contract driven, it was corrected in the next budget, but it's kind of crazy to see those kind of dollars for
Yeah.
what it is, but basically, we're talking about $1 more an hour for like second shift, and then I think it's $1.50 or $2 more an hour for third shift.
Okay, it's a big number.
It is, but Kevin absorbed it, and it is in the 26 fiscal year
Yeah,
budget.
he did, by very close, if you look at the full budget.
I think just in terms of overall comments, since this is, again, we're talking about June, which is the last month of the fiscal year, looking at the fiscal year 24-25 in terms of expenditures, we spent about 99.1% of the budgeted amount, with a pretty big jump in the last month of the year, sort of the last call. Typically, we spend between, 3 to 4 million, and we spent almost 7 million in June. And of all the different departments that are listed in our expenditures, only 9 departments were actually overspent. And collectively, that added up to about $1.1 million overspent. But with several other
And
departments that were
$900,000 of
underspent.
that being worker comp alone.
Yes,
So when you really look at it,
yeah.
The
No,
budget was-
insurance general was
this is probably the best budget I've
900,000.
seen since I've been involved with the board.
And insurance employees was about 65,000, for sure.
Mike?
Just want to know if there was any logic, or what the logic was on some of the pension contributions on page 17. Under the police accrual, the June number is 415,000. It was only 190,000 in May. I do see, we do know that the pension, the police pension is the one that is most in need of funding because of, I was told, because of
Well,
the new pensioners that are.
the short
They've been
answer,
added to the
the short
program.
answer is pensions, you don't get you're not seeing the breakdown, but there's 2 types of pension plans. You have defined benefit, defined contribution. There was a shift in police where members went from defined contribution to the older defined benefit plan. So some defined income lines got shifted. Instead of short funding that, whatever dollars we had to keep the plan in a good position, we shifted between defined contribution, defined benefit.
Okay.
Um,
That's- All right. So that was done outside of that 415 number,
No.
or within it?
It's in there.
Look, so this is a combination of our ARC, which was talked about, right?
Yeah.
So we've got an annual required contribution that's calculated by our actuaries, right? And we've met that in all prior years. I can only assume we met the ARC here, right?
Yes.
Yes.
But we've got the 2 plans, as Rich explained, right? And so we've contributed some money, it seemed like, to the other
More
plan.
to one, less
Right.
to the other, because the personnel actually shift between the plans. We're just trying to make the dollars follow the employee.
Yeah. And then on the other line here for under the town pension accrual, you decide to leave
No, that's-
199,000.
That's defined contribution plan. Again,
Yeah.
there's 2 parts to this,
Yeah.
benefit and contribution. The benefit plan, we fund 100% in accordance with the actuaries. Defined contribution is based, if the employee contributes to his 401, 457, the town matches.
This is the unexpended match, is what it is.
Yeah, so there's employees that are not contributing to the plans.
Right.
So, but we budget for it in case they do. Actually, I believe in the last budget, you noticed that again, and you reduced it. I don't know, maybe it was on the deferred income plan.
Now, did you have the option to use that anyway, to put toward?
We funded in accordance with the actuaries,
Yeah.
I felt that was sufficient.
Okay.
The plans are in the upper 80s
Yeah.
funded. We're in good shape there.
All right. Okay, yeah, I also wanted to commend the department heads. Most departments, including fire and police, were on or fairly under budget. But they were not over budget. So, nice work, town.
I have a quick question on page 13, under parks. The track and field, the very last item on the page. I assume this is a contract for maintaining the track and field. And we had budgeted 80 and we spent 72,800. Is there a reason that we budget for more? Because I'm looking at this same line item for the current fiscal year, and we've budgeted 88, and we expect to only spend 77. But it's a contract, right?
There's contract and maintenance.
Yeah, and the maintenance person that goes there. So there is, the contract was fulfilled, but the other side of it is
So there's a variable portion of the contract,
Yes.
you're
a
saying?
variable portion of it.
Right.
I can't remember the name of the company that's under contract. Actually, we just renewed him. I think,
Hail Mary?
yeah, Cape, I think Cape,
Is it-
his number stayed flat.
Creative Escapes, is it? Yes.
And so they are responsible for the variable part. It's not that we have, people working for the town
No,
that are
there's not
going
people
to
for
do
the town.
cleanup or something like that?
Right.
No, okay.
One minor item here on page 16, a very small number. I just want to know why it wasn't paid, because I always try to mention this. Regional Mental Health Board, $1,135 we had in the budget, and we didn't spend it. Did we want to spend it?
We didn't need to spend it. See, what we have going on the community services side is counselors who deal with mental health, so, and some of those may have fallen into a category of regional, which we didn't have to spend that item, so this is the value of having professional counselors under BH Care that not only does mental health issues, but alcohol issues, whatever it may be, and it's a very important part of this government to our community.
Yeah. So we budgeted for it in case we needed to
Yes.
treat these people through this? Or that's not just an annual contribution or something of that sort, regionally?
It could have been a request from one of the maybe
Yeah.
community
I'll look
service or
into
health
it. We may
directors.
not have, we may have budgeted it, and the organization may or may not exist anymore. They may, just the same thing we do with domestic violence. I think in the next budget, I increased it a little bit because they asked us for a little bit more money. But they need to send us an invoice. If the organization may not exist, I'll look into it though.
Thank you.
All right, any other final questions on the June expenditures?
Again, this is kind of tangentially related. I was wondering if you might be able to share with this board at some point the analysis that you went through where you came up with the decision not to move to a traditional medical insurance, but rather just for workman's comp, because I'm looking at Medicare Part B, and it looks like we were at 134%. So that's nowhere near
No.
246% for workman's comp.
Medical Part B is something that we don't self-insure. Uncle Sam gives us the number that we pay
Okay,
for current employees that are working.
so we just
a reimbursement.
Yeah, and then
projected
there's-
on that?
And there's also reimbursement to retirees that's based on their salary. Medicare Part B changes in January. We basically make an estimate as to where we think it's going.
I see.
Sometimes it goes a lot more.
That is not part of our insurance.
It's not part, yeah, it's outside our insurance.
Right.
The administrative cost is, in the consortium that Mr. Frieda got us into, is extremely reasonable, extremely low. And we pay the actual cost of the claims using Blue Cross Blue Shield's negotiated rates. I don't know how you can get better than that.
And the more the consortium adds, the more compression there is on these administrative costs. That's one of the reasons where we're staying in it. There is no analysis, there's a lot of discussions, okay? Rich and I do this every day. We meet with these insurance companies, with the agents. We look at the different options. We review what we just saw here tonight, some of the deficits and some of the trends. And then we end up making a decision that's best for the town in terms of how to minimize the volatility in workman's comp and how to maximize the productivity of a fully insured policy. And on top of that, part of the presentations and discussions are always, they add resources to us. They're with us. They do training seminars for our employees, our department heads, on how to minimize injuries. That's one of the advantages, a big advantage of going fully insured. So, and they handle all the claims. So that's why we're moving to that, in that direction.
They are looking to add more towns, and it says, once they add more towns, the administrative costs comes in even more. So
But you're referring to the medical there.
The medical, strictly medical. It's a model that is well laid out, makes sense. A lot of volatility disappears because we're in such a large group. Even though you pay your own claims, the size of the group determines a lot of factors.
So we're not in a pool. We're not in a pool where we're sharing liabilities with other members of the consortium. We manage and pay for our own claims. We get the benefit, like we said, for lack of a better way to describe it, aggregate purchasing power to reduce the administrative costs on a consortium program.
All right, thanks, Mike, thanks, Rich. I'd like to ask for a motion to move the May 2025, June 2025, and July 2025 reports.
I just have a couple questions on July.
Please go ahead.
I know it's a new year, and we always discover what's front-loaded, what we pay for up front. Just an odd one that stuck out at me. On page 4, of all things, the Cemetery Commission, they, I guess, do they prepay for their
Well, it's just encumbered.
maintenance of the grounds all year long?
We just encumbered the amount. We
Encumbrance.
haven't paid it. It's under
Right.
encumbrances.
So that was like a past.
Yeah, we have a purchase order that's issued for the contract amount for certain things, and as he invoices, that encumbrance will move over. It just ties to purchase orders being issued.
Okay. Well, as long as that remaining $23,000 balance is enough for
Yeah.
them to maintain the grounds.
No, think of, yeah, it's something that has been paid. Think of an encumbrance as just showing you the purchase orders
Right.
of a liability.
Right.
That's all it
In the
is.
first month for the past or the future?
For
For the future.
Future.
So if you look
Yeah.
at that particular, we have no month expenses against it, so we have not received an invoice for June from them yet.
Okay. All right, the other thing that seemed a little weird here in the fire department page, on page 10, the EMT line got hit for $189,000.
A stipend that gets paid beginning of the fiscal year.
At the beginning of fiscal,
Yes.
okay, front-loaded.
Every year. Yes.
Okay, thank you, sir.
Right. Again, it seems as though there is somewhat of a policy, but it's not uniform, that for some line items, there is an encumbrance, and the department heads are able to draw on that encumbrance for the purchase of certain things, and certainly.
No, you're off track. An encumbrance just means a purchase order was issued. Purchase order is issued, if the material hasn't been received in an invoice, it's not paid. So that's why you'll see more encumbrances usually in the beginning of the fiscal year, because paperwork hasn't caught up with the purchase.
So, for example, the fire department, they have an encumbrance of $42,000 for electricity. I'm assuming that they have not incurred a bill for
Electricity?
42, this is on page 10.
I'm on page 10.
Vehicle maintenance and reserves.
Yeah, they will not have.
Oh, sorry.
Yeah,
Am I
it's
off by a
maintenance,
line? Sorry.
yeah, the 41,000 is maintenance repair on the
Sorry.
engines.
Fit-
Any
vehicle
maintenance on repair on an engine is very expensive.
Right.
Right.
They're public safety. We give them a few open purchase orders,
No, that's
so
my
not
point.
delay their process of
Yes.
getting something back on the road.
Sure. And it makes perfect sense for certain things, but
Yeah,
it
it's just-
doesn't seem like it's uniform across the board. Certainly
No.
for the fire department to, purchase various
You could almost say.
materials and things like
in-
that makes sense.
You can almost say in general, Police, public works probably run maybe 100,000 in encumbrances a month that are always being caught up. Fire's usually more like 150, 180.
Yeah, again, for the fire department to be able to make medical supply purchases without, any delay, I
Sometimes
think
if
makes
it's
perfect
emergency.
sense. Technology, I don't exactly know whether that's a contract or.
Technology is a contract. A lot of the contracts, especially
Or
in
upfront.
police and in
Yep.
In
IT,
IT
are
funded.
paid up day one.
Yep.
Right, so the cost going.
Okay.
All right, so perhaps I was premature in my motion. Are there any other questions on the revenues or expenses for July?
No.
I'd like to make a motion to accept the reports as presented.
Can I have a second, please?
Second it.
All in favor?
Aye.
Anyone opposed? Okay. All right, we have come to the portion of our agenda for public comment. Is anyone in the audience who'd like to make a comment?
And again, Mr. Chairman, we don't have any Board of Ed reports because the Board of Ed hasn't met yet. Is that why?
That's correct.
So we
Yes.
don't have any reports for May, June, or July. And hopefully we will get them next month. Okay,
Right.
thank you.
Sally?
Oh,
Good evening, Mr. Chairman. Sally Buemi, 5 Blossom Drive. Nice to see you. Hope you had a good break and are having a good summer. Our friends from CLA left right after their presentation, but I just wanted to say I was very pleased with their reports and their presentation. And the best thing that they said, in my opinion, is that they're anticipating for the fiscal year that just ended in June, the 24-25 fiscal year, they'll have their audit by December 31st. I think that is so critical because obviously we did not have 23-24 by that date. We just got it tonight. And we didn't have the last completed fiscal year numbers available to us, especially to you, the Board of Finance members, as you were evaluating budget requests during this past budget season for the upcoming fiscal year. And so I think it's really critical that this board have that audit in time for budget season. So I was very happy to hear them say that going forward, they'll be provided by December 31st. I was also very happy to hear about policies and procedures going into place to provide timely Board of Ed monthly and year-end reconciliations. Again, essential for this board in evaluating not only current trends, but budget requests moving forward, and also procedures to prevent material misstatements that we saw in some Board of Ed reports. The only other thing I wanted to say is, this summary showing 24-25, a projected surplus for 24-25 of $293,813. I happen to have the same document from last year for the prediction of 23-24, and our projected surplus was $213,747. So we heard tonight from CLA that the actual audited surplus is $395,000. So we did better than our projected document that we had at this time last year. So I'm hopeful that the 293, which is pre-audited projection, will be on target or perhaps even bettered again. So I thought that was really good, not only last year, but this projection as well. And I feel very confident moving forward that we're going to have some improvements recommended that you said have already started to go into place, Mr. Monaco. So hopefully that will add to future accuracies in projected surpluses. Thank you.
Okay, thank you, Sally. Anyone else in the audience like to speak? All right, seems quiet. I'll accept the motion to adjourn.
Make the motion.
Second.
All in favor? Aye.
Aye.
Thank you, everyone.
The preceding program is brought to you in part through a grant from the town of North Haven. Watch town meetings or other videos on demand at nhtv.com.